I guess I'm wondering, is there a limit to which the Chinese will eventually stop punishing some of their former favorite giants?
It's actually not about the names or about the trend. It's about the names. Tencent, Alibaba were always going to be in the crosshairs of regulators because they had that perfect combination of both monopolistic control over the sectors in which they were operating, as well as a significant number of licenses and other kind of super app components that made them kind of these behemoths that wouldn't exist in a Western market condition. And so I think we'll continue to see those types of businesses targeted in this environment. But those in healthcare, those in other consumer verticals won't see that same level of scrutiny.
Yeah, we had a discussion with Kathy Wood about this yesterday of ARK. She has long called for a reset on these Chinese names, but she wouldn't go so far as to say they're uninvestable. But at the same time, she said what happened to for-profit education over there is going to ring in investors' minds for a long time to come. I wonder if you agree.
I don't, actually. I think for those of us sitting on the ground here, what occurred in the online and the for-profit education space wasn't too surprising. This was always a bit of a regulatory gray zone. There was a lot of forewarning out of regulators here. The businesses were getting out of hand and were enacting predatory policies that were essentially creating a disequal environment where parents were being forced to pay higher and higher amounts of money for test prep. Public school teachers were shirking their responsibilities to provide services to paying students outside of their traditional role. And frankly, it was an area that we as a fund have never invested in, period. And so I think that if you're a tourist investor who only looks at the headlines and isn't here physically on the ground as we are, you might be surprised by these developments. But for those of us here on the ground, not a huge surprise.
So, Ben, as somebody on the ground, where are you putting money to work right now, then?
I mean, again, there's so many verticals that are untouched and unaddressed by any of these regulatory changes. So healthcare remained a massive boom point here in China. The regulators supporting it, talent flow returning to town to support it, a huge arbitrage and deficit between the quality of care and services and products in Western markets and those here in China. New consumer, again, a very non-controversial space, seeing tremendous growth, domestically built brands, consumption channels, and then we believe core technology, so chips, operating systems, quantum, anything that kind of bolsters China's independence, a lack of necessity for core inputs coming out of the United States is seeing tremendous regulatory support, subsidies, and of course investment dollars. And all three of those areas where we invest are booming today.
Certainly continue to see the tensions between the U.S. and China increase, whether it's, some of the military or national security exercises that have been taking place in the region, or obviously what's happening with Afghanistan right now, or even obviously the trade war and the tariffs that are still in place here. Does that, I guess, affect or color your view on how you're approaching your investments in the country?
Certainly where, we would discourage companies that are China Inc. from looking to expand into Western markets. There's going to be a significant repositioning of Chinese companies going public in Hong Kong rather than the United States. I think that's both because of data security fears on the Western side, that somehow there would be data leakage from China into Western regulator hands, just as Americans feared last year that TikTok data was going to be distributed to the Chinese direction. And so I think it doesn't color too much of what we do, because the sectors in which we invest are very much dependent on domestic consumption or expansion to other markets. But it will certainly affect where people go public and where they draw their capital.
There's been a lot of discussion here, Ben, about the impact of the Delta variant on supply chains leaving China, coming into the United States. And I'm wondering how you are thinking about China's ability to handle this particular variant, maybe future variants, given their levels of vaccination and the efficacy of their vaccines. Do you see this getting maybe a little bit better with each cycle every time?
China's taken a very different approach to the West. It's a total lockdown here. It's almost impossible for anyone to come into the market today. And I think this lockdown will extend throughout the entirety of next year. We've got some major political events as well as an Olympics coming up that they wouldn't want to jeopardize. And so I think that the major outbreaks will remain in check largely here just by brute force rather than vaccination. And therefore, I think that there will be limited impact of the day-to-day operations here in the market through that policy. Ultimately, we'll have to find ways to live with it and increasing vaccination rates. But our view is that limited impact from these subsequent waves here domestically.